You are watching Daily Market Pulse. Today is Thursday, May 14, 2026. If you want a clean daily read on macro and market risk, subscribe for the next briefing. Inflation spikes again, pushing the Federal Reserve to stay tough on rates, while crypto awaits a crucial vote that could reshape its future. Today's agenda: inflation and Federal Reserve policy, crypto's regulatory crossroads, commodities and geopolitics, stock market dynamics, Bitcoin's path forward, market update. Let's start with the big economic news: inflation. Good morning. Let's dive straight into the biggest economic news: inflation. The April Consumer Price Index report just landed, and it's showing prices are still climbing. We saw a 0.6% jump month over month, pushing the annual rate up to 3.8%. That's the highest we've seen since May of last year. The big culprit here: energy prices, which are being pushed higher by ongoing geopolitical tensions in the Middle East. This is a major concern for the Federal Reserve. Why does this matter so much? Because sticky inflation means the Federal Reserve can't easily cut interest rates. Their main goal is to get prices back down to their target, and this report shows that's a tough fight. Higher interest rates mean borrowing money becomes more expensive for everyone, from individuals buying homes to companies looking to expand. So how did markets react? Well, it's a mixed bag. The S&P 500 and Nasdaq actually hit new record highs yesterday, thanks to a rebound in chip stocks. But beneath the surface, there's worry. Bond yields edged up a bit as investors started to think rates might stay higher for longer. What should you watch next? Listen closely to any comments from Federal Reserve officials this week. They'll be looking for more evidence that inflation is truly cooling before they even think about lowering rates. The next inflation report will be absolutely critical. The key takeaway here is simple: inflation is proving to be a persistent problem. This means the days of super low interest rates are likely behind us for now, and that changes how we should think about investing. Now let's turn to the world of digital assets. Now let's shift our attention to the digital asset space. The crypto market is holding its breath today as the U.S. Senate Banking Committee is set to vote on the Digital Asset Market Clarity Act. This is a big deal. This bill is designed to create a clear set of rules for digital assets, covering things like stablecoins and how exchanges operate. The White House is even aiming to have it signed into law by July 4th. So why is this so important? Well, clear regulations are like a green light for big money. Many institutional investors have been on the sidelines, waiting for certainty. If this bill passes, it could open the floodgates for them to invest more heavily in crypto. On the flip side, if it fails, the uncertainty continues, which could slow down adoption. How are markets reacting? Right now, the crypto market is playing defense after that inflation surprise. Bitcoin is managing to hold that important about $80,000 level, which is a good sign. We're seeing low levels of Bitcoin on exchanges, meaning people are holding on and big players or whales are buying. This suggests confidence in the long term. What do you need to watch for? The vote itself is the main event today. If it passes, we could see a rush of new investors jumping in. If it doesn't, expect more price swings. The key takeaway here is that this vote could be a major turning point for crypto, either paving the way for massive growth or keeping things uncertain for a while longer. Turning now to the commodity markets, particularly oil. Let's shift our focus to the commodity markets, specifically oil. Prices are still holding firm above about $100 a barrel. This is largely because of the ongoing geopolitical situation in the Middle East. The conflict involving Iran continues to be a major factor pushing energy costs higher. This is a big deal for all of us. When oil prices are high, it affects everything. Think about the cost of getting goods to stores, the price of gas at the pump, and even the cost of producing many everyday items. This is a significant reason why inflation has been so persistent. It puts a real squeeze on household budgets, meaning people have less money to spend on other things. So how did the market react today? Well, WTI crude actually dipped a little, down less than 1% to about $102 a barrel. But don't let that fool you. The overall trend is still very much upward. WTI crude is trading at about $100, slightly lower on the day. This tells us the market is very aware of the supply risks. What should you be watching for? Any news from the Middle East will be critical. An escalation could send prices soaring, while a de-escalation might bring them down. Also, pay attention to how this impacts the central bank's decisions on interest rates. The main point here is that high oil prices are a major reason why inflation is sticking around, and they'll continue to affect your wallet until those geopolitical risks calm down. Meanwhile, the stock market is showing surprising resilience. Now let's look at the stock market. It's showing some surprising strength. Yesterday, both the S&P 500 and the Nasdaq closed at new record highs. This happened even though we got that hotter-than-expected inflation report. The main driver here, technology stocks, especially those in the artificial intelligence space, which saw a nice rebound. Why is this happening? Well, investors seem to be betting on the long-term growth story of AI. This AI investment boom is currently propping up the economy and keeping employment strong. It's kind of masking some underlying issues, but this also creates a potential problem. If AI investment slows down, it could cause a much bigger economic shock. How did the market react to all this? Investors seem to look past the inflation numbers, at least for now, and focus on the tech rebound. The 30-year bond yield did tick up to 5%, which shows some concern about inflation, but the Nasdaq's performance suggests people are still willing to buy growth stocks. What should you watch for next? Pay close attention to those AI-related companies. If we see any signs that investment in AI is slowing down, that could quickly change the market sentiment. Also, keep an eye on those bond yields. The key takeaway here is that while the stock market, especially tech, looks strong, its heavy dependence on AI growth could be a future risk. Finally, let's talk about Bitcoin. Despite the recent inflation news that has the broader market a bit nervous, Bitcoin has managed to hold that really important about $80,000 level. This is a significant sign of strength. We're also seeing some key data points. Bitcoin reserves on exchanges are at a 7-year low. This means there's less Bitcoin available to be sold, which can help support prices, and whales, or large holders, are buying up Bitcoin at levels we haven't seen since 2013. This shows a lot of confidence from big players. Why is this happening? Many investors are increasingly seeing Bitcoin as a hedge against rising inflation, against geopolitical risks, and against the idea that government-backed money might lose value over time. Bitcoin is trading at about $79,600, slightly higher on the day. The overall crypto market is a bit defensive right now, but these underlying numbers show people are holding on. What's next for Bitcoin? The biggest event today is that Clarity Act vote. If it passes, we could see Bitcoin break through about $82,500 and head towards about $85,000. If it fails, we might see it test support levels around about $78,500. The main takeaway here is that even with all the short-term noise, Bitcoin's strong base of holders and the potential for clearer regulations make it a compelling asset for the long haul. Now let us turn to today's live market snapshot, where gold, crypto, stocks. Now for our daily financial market update. Here is where the key asset classes stand as of Thursday, May 14, 2026. Gold is trading at about $4,710, slightly higher on the day, and is slightly lower over the past 5 sessions. Silver is at about $87, lower today and strongly higher over the past 5 sessions. In crypto, Bitcoin is at about $79,600, slightly higher on the session and sharply lower over the past 5 sessions. Ethereum is at about $2,250, flat today. Other major crypto, Solana at about $91, flat, BNB at about $674, slightly higher, XRP at about $1.448, higher. On equities, the S&P 500 at 7,444.3, slightly higher. The Nasdaq at 26,402.3, higher. The Dow at 49,693.2, slightly lower. Internationally, the DAX at 24,453.5, higher. The Nikkei at 62,654.1, slightly lower. The FTSE at 10,363.8, slightly higher. On the bond side, the 10-year U.S. Treasury yield is at 4.4%, slightly lower on the session, and the 30-year yield is at 5%, slightly lower. Yields remain in focus as the market watches for Federal Reserve signals. Rounding out the macro picture, WTI crude at about $100 per barrel, slightly lower. The dollar index at 98.56, flat. Euro dollar at 1.17, slightly lower. The overall tone is risk-on. Equities and crypto are both bid, suggesting investors are positioned for continued upside in the near term. So what does today mean for you? Inflation remains sticky, forcing the Federal Reserve to keep interest rates higher for longer, which is a concern for growth stocks. Meanwhile, the crypto market is on the cusp of a major regulatory shift with the Clarity Act vote, which could unlock significant institutional capital if passed. Thank you for your attention, and we will see you again tomorrow.